Let's get to the question of the day. Does a debt deal break us out of the range? Joining us now, Lori Calvasina, RBC Capital Markets, head of U.S. equity strategy. Lori, does it?
Well, look, I think this is a complicated market, Alex, but I will tell you that some of the more bearish investors that I've been talking to, really more on the hedge fund side, the non-U.S. crowd, they have been very negative on the U.S., and the debt ceiling has been one of the things that's fed their negativity. So if you pull the debt ceiling as a risk off the table, I think at the very least it is going to, sort of quelch some of the pessimism that the non-U.S. Hedge fund crowd has had on U.S. equity markets, so it removes an important pressure point.
Laurie, good morning. It's Guy. Great to see you. If we do break out, do you chase it?
So look, some of my models have pointed to, upside to around, say, 4,300 on the S&P. I can get there from a valuation perspective. I can get there on one of my sentiment models. In general, though, I do feel pretty good about my base case of 4,100 on the S&P at year end. And that's not to say we couldn't overshoot it a bit in the short term. But I do think in general, multiples are about where they deserve to be. I think there's still some uncertainty in the earnings outlook. We've had a very, very good reporting season, but there is still a lot of questions that investors have about the outlook for financials earnings in particular. I think it depends. The answer to that question, Guy, it's really whether you chase it. It depends on your time horizon. I think that short term, sure. Longer term, I do think that the tech trade in particular feels like it's starting to run out of catalysts, and that has really buoyed the market in here. I would just answer it by telling you I still like my 4,100 number at year end.